Welcome to the channel. My name is Jodie Knight. You can find my live portfolio over on Etoro. The link for that is in the description down below. Other than that, though, it's PayPal Thursday, my favorite day of the week. The video today, we're going to look at the daily chart for PayPal, the weekly chart, the open options and interest, and also we're going to talk a little bit about my price targets, where I'm going to add, where I'm going to trim, that kind of stuff. On top of that, though, we'll also take a look at the general market overview. So that'll be the economic data that was out yesterday and what's coming out today, as well as a little look at some PayPal nuggets of news. All right, let's hop straight into the daily chart. Oh, I did want to mention there's no camera in today's video because I'm still in my pajamas, just in case you're wondering. So I'm not always going to be on camera, but I'll try my best to not be as lazy in future. But for the most part, PayPal is doing amazing. I love this move here from the bottom here. We managed to pop and hold about 25% gains. That is exactly what we wanted to see. We knew that there was going to be some resistance on this gap fill, and actually I've been quite impressed that the downside for that only got us to the historical support there, a 4-ish% drop. So that's amazing, especially given the weakness in the overall market. This has been super impressive. A lot of other fintechs been absolutely slaughtered again. So very happy with that. Other than that, I did make a couple of changes to my PayPal position in my main portfolio over on eToro, but my weighting actually stayed the same. The main thing I did was got rid of some of my old small legacy positions and rolled them into one larger position. So that's all I did there. Targets though, still looking at $100 really for this year at least. I have updated my models and my price targets moved up to about $124 for fair value. But that is, I'm kind of starting to wiggle in some of the new product numbers and stuff. I'm just kind of best guessing. But I think the next quarter we'll see the fair value raised to about 140. So we'll see. But for the most part, I'm not really adding and trimming to this one. I'm currently at about 14% weighting. I'm happy to go overweight on this one until it gets to its target. So not really doing any trimming. Obviously, though, if there was a 10-20% move in a day, I normally trim those moves just because they typically have pullbacks like here. 6%, I mean, that could be considered quite large for PayPal, but then it pulled back. But that made sense because it came up to this trend line. So it's all going to depend on the numbers. But my plan right now is not to trim. This $75 area was a previous take profit target of mine. I'm not sure how I feel about it. I think we're going to get a little bit of a pullback here, but given the volume shelf here, I don't think trimming is going to be really worth it. Is it worth it for 3%? Probably not. May as well just leave it in after you take out this spread. It's probably negligible. Makes sense to just hold. At the rate in which PayPal is recovering, I'm probably not going to be holding this position next year unless the as business is game changer and I just have to put my targets up even higher. So we'll see. But I think given in that scenario, I'll probably reduce the size of my position from a 14% weighting. I'll probably be happier between 5 and 10% on that because at that point I will have caught the meat of the move, and that's kind of my strategy. That's how I roll. But other than that, like I've just pointed out, that peak volume shelf is going to be a bit of a magnet there, and then we've got this $75 target resistance, which also completes the measured move here. To the downside, though, we do have this big volume gap in the gap fill, but it looks like this historical support here at $70 has been pretty good. So I'd expect that to hold again, and then if not, it would come back down to this $66 range. If we did have a pullback down there, I might have to go even more overweight, to be honest. The company is nailing it and executing, so I would be very happy to buy more shares. The indicators here, RSI is getting a little bit hot. It typically likes to cool down when it gets here, as we can see historically. We normally ease off the gas a little bit, so if we're not going to chop here, a little pullback shouldn't be too out of left field, so should be expected really. Then the MACDX Plus, looking good. I mean, institutions have actually absolutely gobbled this, 92%. No retail. The golden cross is still well in play. Doesn't look like it's coming together anytime soon. So I think when we get rate cuts again, the financial companies are going to be very happy and things should start expanding, especially for PayPal and SoFi. Flow's starting to get a little bit flat though, so it's looking a bit tired. It looks like it wants to rest. I don't know if there's going to be a considerable pullback just because of what's happening in the market and how strong it's been, but if there is any weakness in this one, I'll be buying it up. Let's just move on to the weekly chart then. Have you ever seen anything more gorgeous than this chart? Look at this. All that green cheddar. 24.75%, and that was 1, 2, 3, 4, 5, 6 weeks in a row we had green bars. But it's looking a bit tired. But should that surprise us? No. We've hit this peak volume. It sucked us right up to it, and then it kind of cooled off a little bit, which was to be expected. Peak volumes are always going to act as kind of a magnet, and prices are always going to move very quickly through these low volume areas. They kind of just mean there's not much interest in buying at those prices, so the price will move between the prices that are desirable very quickly. This was on kind of decreasing volume, which isn't super great, but technically the chart looks very healthy. The RSI is getting a little bit warm, but there's still a little bit of room it could go. Ideally on this weekly, I would want it to pop to this next level at $75 and then turn this into support and then kind of chop around and cool off. But on the MACD Plus, this is looking like a golden cross is coming, and that's very bullish. Love that. Institutions are over 50% still, and retail's out. So the MACD Plus is saying things are looking good. On the flow as well, it's looking pretty good. It can stay in this kind of area for a while. We've not had a golden bar, but these golden bars really picked out the lows here. And I've mentioned a few times, these triple bar setups, normally pretty good. I mean, we had them here, 1, 2, 3. I didn't quite catch the low, but if we're just taking it from the average, 28% off. Not great, but hit or miss. I wouldn't make a strategy solely on these, but as a bit of confluence, for example, we got overbought here and the technicals were bouncing on this trend line. That would have been a very bullish signal. Back here, we did have a bottom catch, which was voided. But like I say, you need to have confluence. This, I think I probably did add here, to be fair, because there was a double bottom. Then we had the bottom catch, and then we kind of had the golden bar. So, but that's just another kind of accumulation check mark for me anyway. I don't just go all in. I'm going to add all through here. Okay, then moving on to look at the open options interest. It looks like they've had a bit of a website update or something. This chart looks much brighter than normal. But like we looked at the targets on the daily chart, this 75 kind of this whole range that people are picking out some resistance. So it's likely going to chop around here for a little while. There's not much support on the downside, which isn't ideal, but a lot of that can still come from the technical side of the chart. So I'd expect this $68 range to hold quite steady. But for the most part, people seem to be fairly bullish on this one for next week. This $54 support, don't even know what they're thinking. That's crazy. It's probably a legacy position or something like that. But a week out, that low side support gets washed out. So your low side support does move up to these kind of peaks here at $69-ish. And then resistance, we've pointed it out on the daily chart and we've just talked about it. This $75 is going to be a tough one, which is not necessarily a bad thing. It means if we can hit it, pull back, turn that kind of 72 area into support on that gap, that's going to allow the rest of the indicators to cool off a little bit and give it some energy. A stock can't go up parabolically and be healthy. It just doesn't work like that. If it's going to be violent to the upside, it's going to be violent to the downside, and that is stressful. You might think you want that, but you do not. Just want to have a quick look at the week after. Yeah, a bit more downside. So people are expecting it to hit 75 and have kind of a break there. Let's take a look at 2025. That's a big expected move. So by year end, $100 is still being picked out there. Can't hate that. I think a lot of people that are valuing this company, which will be these kind of institutions that use derivatives, will know what they're looking at. So given that that's not that far away, it's September, and these options are for January. I think this is pretty bullish that these are still open. And 2026, I think I remember they were coming down a little bit. So we have the high resistance at 95, but I think these targets will end up being raised with the ads business coming and Fastlane rollout picking up pace. I'm pretty sure we're going to start seeing more targets over 150 here. Okay, other than that, we've got a little bit of news for PayPal, not too much, which makes the move even more impressive, really, to be honest. But PayPal announced another partnership with FISA. I'm not actually sure how you say it, but they're definitely on a roll here. Expect to see more partnership announcements, and eventually they'll stop announcing because there'll just be a big old uptake. But other than that, though, I did want to talk about price target revisions on this amazing new app that I didn't know I was entitled to get for free on Etoro because I was in the platinum tier. So I think when you get a certain size portfolio, you get access to a load of good stuff. I think Wall Street Journal's on there as well. But let's have a look. So on FinChat, which is the 3 app that I've realised I've got access to, bearing in mind I've been paying for multiple different tools and looking at various different websites when I could have been just using one tool for the entire time. But, live and learn. But the main thing I wanted to talk about regarding to PayPal on here was the analyst price target revisions have inflected. For the first time, we're seeing them actually lift them up. Now, their current price target is about $80. I wouldn't trade off these targets because I find that they normally just track the price of the underlying stock. I mean, as you can see here, the price of PayPal's done the same. But the main thing I was quite excited for was they actually are lifting their targets up instead of cutting them, which is what they've done. Even when PayPal looked like it was going to start recovering, they continued to cut here into strength. But aside from that, though, I just wanted to point out a few things on this tool, website, whatever you want to call it. There's just so much data on here. We've got the financial data, so you've got all your standard stuff like your income statements, balance sheets, all that kind of stuff. Sorry, it's running a bit slow because I've got so much running on my laptop at the moment. You've got all the earnings stuff. You've got the breakdown here of the transcript, which is normally you have to pay for this. So consider yourself lucky. You also get the slides. You get all the estimates. We were just on that tab. But you can go EPS, EBITDA, whatever, free cash flow, whatever floats your boat. Ownership as well. Quite nice that this is on one site. Typically, I would have to go to FinTel to find this information, and that's a paid site to get some of this information, especially the nitty-gritty bits. Especially if you want to go into the specific trades, you do have to pay on FinTel as well. Industry. So you get to look at its peers, see what they're doing, what kind of market multiples they're getting, and you can change all of this criteria. You just add stuff in, and there's so much criteria that you can change. It's just mountains of it. So all the data you could possibly want. It does have built-in modeling, which it's not the most comprehensive, but it'll get you started. It's a good place to learn how to model, really, because it's letting you change certain cells rather than having to put in all of this data in your own Excel document and getting a bit confused, which is nice. It's also got all the filings, so the 10Q, that sort of stuff. If you want to get in the nitty gritty stuff, it's got the 8Ks and all that good stuff. What else was there I wanted to talk about? It does have charting. I've not looked at the charting yet, but I'm sure it's pretty good. There was something else. I can't remember what it was though. Oh, on the financials page, if it loads, you can stack all of your stuff here and display it in whatever way you want. So you can change lines to charts to bars even. You can hide them individually if it makes it easier for you. So, and this all saves automatically per each stock that you copy. So if you have certain layouts for each one, perfect. I'm previously using visualcharts.com. I love it. I'm not sure I'm going to get rid of that because the way it displays the tables, it's easier for me to put on my website. These would be a lot more copy and pasting, but I think I can get rid of a couple of my other sites that I'm using for data and just combine into one. It's got Copilot. I haven't used it. I don't know how good it is. Your dashboard is super customizable. I think that was it. I'm sure I'll find some more good stuff, but definitely recommend it. If you're a platinum club member on eToro, sign up for this website. If you're looking to learn a bit more about the fundamentals and how to value a company, get on this website. It's going to save you a bunch of hassle. Thumbs up. So economic data yesterday, we had mortgage data. Mortgage rates come down a smidge. Can't hate that. That's going to continue. Mortgage applications is up, but again, still weak. Index is good. I don't think the market's paying particular attention to mortgage data yet. I think as rate cuts kick in, that's going to be more of a positive thing to track, mainly because it should help reduce inflation numbers again, primarily just as it unlocks the market. Supply and demand, the market's so locked up, the demand is so high, but supply is so small. Balance of trade, nominal, exports, imports, blah, blah, blah. Red book year over year. That's good. That's shown some strength. I think the red book was the what's it called? It's top 9,000 stores. So it's good to see that being strong, really. Consumer doesn't look weak there. Factory orders month over month, actually up for a change. Get rid of that alert. Excluding transportation, up a little bit. Jolts, job quits. Actually, that's not too bad. I thought it was going to be worse. So it was forecasted to be lower than the previous read, but it actually came in higher, but not hugely so. I'll have a quick look at the big picture on this one, though. So the number of job quits. So it's definitely stabilizing, one could say. Manufacturing 25k, leisure and hospitality 55k. So I'm not really surprised to see the health services there. That's been one of the stable areas this week as well. Government, do I trust those numbers? Beige book, boring. Okay, so job numbers out today. Watch out. If these come in bad, we'll start sliding as well. The services data is going to be really important today. I always talk about how manufacturing data is not the focus of the US economy anymore. So I don't really, I mean, it impacts a little bit, but not as much as services. Services is the driver. So if these numbers come in strong, that's good. We are forecasting for a kind of very similar read. So we're forecasting stability. So if the market doesn't see stability, expect us to drop if we come in weak. If we come in strong, though, that's good. That eases a lot of the recession worries that we've got going into the first cuts. The chances of the first cuts being 50 basis points has been increasing over the last few weeks. I'm not sure if I like it. I think to me, it makes it feel like the cuts are going from not even on the cards to a bit of a panic cut. I want it to be slow and steady, but I think they should have been cutting already, just to, dip their toes in the water and kind of ease into it. Instead of, I think what's going to happen is we might have to cut aggressively, which is not necessarily a good thing for the market. That could cause some more concerns that the next cut's going to also have to be large. And then if that keeps happening, we run the risk of, do we have an emergency cut as well to stimulate? Not ideal. I would have preferred to cut earlier and smaller increments. That doesn't necessarily mean they had to cut every meeting as well, but we shall see. Boring, more mortgage stuff. Fed balance sheet. Take a quick look at this. Are they still running it off? Yeah, still running. So they're not quite flattening out yet, but I expect this to flip as we switch to quantitative easing. Always struggle to say that. I hope you enjoyed this video. If you did, give me a like, share with your buddies, and subscribe to the channel, and I hope to see you tomorrow.